In January 2024, something happened that changed the crypto world forever. For the very first time in history, everyday investors could buy Bitcoin not by setting up a crypto wallet, not by going to an exchange but simply by clicking a button in their regular stock brokerage account. Just like buying a share of Apple or Google, this was made possible by something called a Bitcoin ETF, and the result? Billions of dollars flooded into Bitcoin almost immediately. BlackRock alone purchased nearly $2 billion worth of Bitcoin in just the month of April 2026. Total Bitcoin ETF assets have crossed $100 billion, so what exactly is a Bitcoin ETF, why is it such a big deal, and most importantly how does it affect you as an investor? By the end of this video, you will understand everything about Bitcoin ETFs in simple, easy language. Let's get into it. What is an ETF? Before we talk about Bitcoin ETF specifically, let's first understand what an ETF is. ETF stands for Exchange Traded Fund. Think of an ETF like a basket. This basket holds a collection of assets. It could be stocks, bonds, gold, oil, or anything else. Instead of buying each asset individually, you simply buy a share of this basket. And that share trades on a regular stock exchange just like a normal stock. For example, the most famous ETF in the world is the S&P 500 ETF, also known as SPY. Instead of buying shares in all 500 companies individually, you simply buy one share of SPY and instantly you have exposure to all 500 companies at once. ETFs are incredibly popular because they are easy to buy. You can buy them through any regular brokerage account. Regulated and safe. They are approved and monitored by financial regulators like the SEC in the USA. Affordable. Most ETFs have very low fees compared to other investment funds. Liquid. You can buy or sell them anytime. The stock market is open. Now a Bitcoin ETF works the same way. Instead of holding stocks, the basket holds Bitcoin. When you buy a share of a Bitcoin ETF, you are getting exposure to Bitcoin's price without ever needing to touch actual Bitcoin yourself. The history of Bitcoin ETFs: a long road. The Bitcoin ETF did not happen overnight. It was a long, difficult journey that took over a decade. The very first Bitcoin ETF application was filed back in 2013 by the Winklevoss twins, the famous early Bitcoin investors. The SEC rejected it. Over the next 10 years, dozens of companies applied for a Bitcoin ETF and the SEC rejected every single one. Their concerns were about market manipulation, lack of regulation, and investor protection. The crypto community grew increasingly frustrated. They watched gold ETFs, oil ETFs, and even cannabis ETFs get approved, but Bitcoin kept getting rejected. Then finally in January 2024 everything changed. The SEC approved the first ever Spot Bitcoin ETFs in the United States. This was a historic moment for the entire crypto industry. On the very first day of trading, Bitcoin ETFs saw over $4.6 billion in trading volume, one of the biggest ETF launches in history. Companies that launched Bitcoin ETFs included some of the biggest names in finance. BlackRock, the world's largest asset manager, launched its Bitcoin ETF called IBIT. Fidelity, one of the most trusted investment companies in the world, launched FBTC. ARK Invest, Invesco, VanEck, Bitwise and several others also launched their own Bitcoin ETFs. The gates had finally opened. Wall Street had officially entered the crypto world. Spot Bitcoin ETF versus buying real Bitcoin. What's the difference? Now this is a very important question. What is the difference between buying a Bitcoin ETF and just buying real Bitcoin? Let's break it down clearly. When you buy real Bitcoin, you need to create an account on a crypto exchange like Coinbase or Binance. You need to set up a crypto wallet to store it safely. You are responsible for your own private keys and seed phrase. If you lose them, your Bitcoin is gone forever. Your Bitcoin is held in a digital wallet, not in any regulated financial account. You can buy and sell 24 hours a day, 7 days a week. When you buy a Bitcoin ETF, you simply buy it through your regular brokerage account, the same place you buy stocks. You do not need a crypto wallet. You do not need to manage private keys. Your investment is held in a fully regulated financial account protected by standard financial laws. You can only buy and sell during stock market hours, Monday to Friday. You do not actually own any Bitcoin. You own shares of a fund that holds Bitcoin. So which is better? It depends on what you want. If you want simplicity and security through a regulated account, the Bitcoin ETF is perfect for you. if you want full ownership and control of actual Bitcoin, you should buy real Bitcoin and store it in your own wallet. Many smart investors actually do both. They hold some Bitcoin in a personal wallet for full ownership, and some in an ETF for convenience. Why Bitcoin ETFs are a game changer? The numbers tell the story. Let's talk about just how massive the impact of Bitcoin ETFs has been, because the numbers are truly extraordinary. When Bitcoin ETFs launched in January 2024, many experts expected moderate interest. What actually happened shocked everyone. In their very first week, Bitcoin ETFs attracted billions of dollars in inflows. BlackRock's IBIT became one of the fastest ETFs in history to reach $10 billion in assets. Fast forward to 2026. Here is where things stand. In April 2026 alone, Bitcoin ETFs collectively attracted nearly $2 billion in net inflows, the strongest month of the year so far. On May 1, 2026, a single day saw $629.8 million flow into Bitcoin ETFs, with BlackRock contributing $284.4 million and Fidelity adding $213.4 million in just one day. Over the first week of May 2026, Bitcoin ETFs attracted over $1.1 billion in just 2 trading sessions. Total Bitcoin ETF assets have crossed $100 billion, making it one of the most successful ETF launches in financial history. What does all of this money mean for Bitcoin? Simple. When institutions buy Bitcoin through ETFs, they are taking real Bitcoin off the market. This reduces supply, and with Bitcoin supply already fixed at 21 million coins, reduced supply combined with growing demand means upward pressure on price. This is one of the key reasons Bitcoin hit its all-time high of $126,198 in October 2025. Pros and cons of Bitcoin ETFs. Like any investment, Bitcoin ETFs have both advantages and disadvantages. Let's look at both honestly. Advantages of Bitcoin ETFs. Simplicity. You do not need any technical knowledge, no wallets, no seed phrases, no private keys, just buy it like a stock. Regulated and safe. Bitcoin ETFs are approved by the SEC and held in regulated financial accounts. This gives investors legal protection that buying crypto on an exchange does not. Accessibility. Millions of people already have brokerage accounts with companies like Fidelity, Charles Schwab, or TD Ameritrade. They can now buy Bitcoin exposure with zero additional setup. Retirement accounts. This is huge. Many Americans can now hold Bitcoin in their IRA or 401k retirement accounts through ETFs. This was simply not possible before. No custody risk. You do not need to worry about losing your private keys or getting hacked. The ETF provider handles all the security. Disadvantages of Bitcoin ETFs. You don't own real Bitcoin when you buy a Bitcoin ETF. You do not actually hold any Bitcoin. You cannot send it, use it as payment, or move it to a personal wallet. You simply own shares of a fund. Management fees. Bitcoin ETFs charge annual fees typically around 0.25% per year. While small, these add up over time compared to simply holding your own Bitcoin. Stock market hours only. Bitcoin trades 24/7. Bitcoin ETFs only trade during stock market hours. If Bitcoin crashes at 2 a.m. on a Sunday, you cannot sell your ETF until Monday morning. Not your keys, not your coins. The famous crypto saying still applies. When you hold a Bitcoin ETF, you are trusting BlackRock or Fidelity to safely hold the actual Bitcoin. If something ever happened to them, though extremely unlikely, your investment could be affected. Who should buy a Bitcoin ETF? Bitcoin ETFs are ideal for traditional investors who are comfortable with stocks but have never bought crypto before. If you already have a brokerage account, a Bitcoin ETF is the easiest way to get Bitcoin exposure with zero learning curve. Retirement savers who want to add Bitcoin to their IRA or 401k without the complexity of managing crypto wallets. Older investors who want Bitcoin exposure but are not comfortable with crypto exchanges, wallets, and private keys. Conservative crypto investors who want the price exposure of Bitcoin but prefer the safety of a regulated financial product. Financial advisors who want to recommend Bitcoin to their clients through a regulated, recognized investment vehicle. Bitcoin ETFs are not ideal for true crypto believers who want to hold actual Bitcoin and be their own bank, people who want to use Bitcoin for payments, DeFi, or other blockchain applications, long-term hodlers who want to avoid paying annual management fees. If you fall into the first group, a Bitcoin ETF could be the perfect starting point for your crypto journey in 2026. Why Bitcoin ETFs matter for the future of crypto. Here is the bigger picture why Bitcoin ETFs are not just important for individual investors, but for the entire future of cryptocurrency. Legitimacy. For years, many people dismissed Bitcoin as a speculative gamble or a tool for criminals. When the SEC approves a Bitcoin ETF and when BlackRock, the world's largest asset manager, puts its name on a Bitcoin product, it sends a clear message to the world: Bitcoin is a legitimate asset class. Institutional money, pension funds, university endowments, insurance companies, and sovereign wealth funds manage trillions of dollars. Most of them cannot directly buy crypto, but they can buy regulated ETFs. Bitcoin ETFs have opened the door for this enormous pool of capital to flow into Bitcoin. Price impact. As we have seen, institutional buying through ETFs directly supports Bitcoin's price. In April 2026, nearly $2 billion flowed into Bitcoin ETFs in a single month. This kind of demand from major institutions is a powerful force. Mainstream adoption. When grandparents can buy Bitcoin in their retirement accounts without knowing what a blockchain is, that is true mainstream adoption. Bitcoin ETFs are making this possible. Global expansion. Following the USA, other countries are now launching their own Bitcoin ETFs. The UK, Canada, Australia, and European nations are all seeing growing demand for regulated Bitcoin investment products. The approval and success of Bitcoin ETFs may well be remembered as one of the most important moments in crypto history, the moment Bitcoin went from being an internet curiosity to a global financial asset held in the portfolios of the world's most powerful institutions. How to buy a Bitcoin ETF step by step. So how do you actually buy a Bitcoin ETF? It is incredibly simple. Here is a step-by-step guide. Step 1. Open a brokerage account. If you do not already have one, open an account with a reputable broker like Fidelity, Charles Schwab, TD Ameritrade, or Robinhood. This is free and takes about 10 minutes. Step 2. Fund your account. Transfer money from your bank account into your brokerage account. This usually takes 1 to 3 business days. Step 3. Search for a Bitcoin ETF. In the search bar of your brokerage app, type one of these ticker symbols: IBIT, BlackRock's Bitcoin ETF, FBTC, Fidelity's Bitcoin ETF, ARK Invest's Bitcoin ETF. Step 4. Buy your shares. Decide how much you want to invest, enter the amount and click buy. That's it, you now have Bitcoin exposure through a regulated financial account. Step 5. Monitor your investment. Track your investment just like you would track any stock. Remember, Bitcoin is volatile, its price can move significantly. Only invest what you can afford to lose. Conclusion. So let's quickly recap everything we covered today. A Bitcoin ETF is a regulated financial product that gives you exposure to Bitcoin's price without ever needing to buy, store, or manage real Bitcoin yourself. Bitcoin ETFs were approved in the USA in January 2024 after more than a decade of rejections. This was a historic moment for crypto. In 2026, Bitcoin ETFs are stronger than ever. BlackRock alone added $284 million in a single day in May 2026. Total ETF assets have crossed $100 billion. Bitcoin ETFs are perfect for traditional investors, retirement savers, and anyone who wants Bitcoin exposure through a simple, regulated, familiar financial product. They are not perfect for everyone, but for millions of people around the world. Bitcoin ETFs are the easiest, safest, and most accessible way to invest in Bitcoin. The era of institutional Bitcoin has officially arrived, and Bitcoin ETFs are leading the way. If this video helped you understand Bitcoin ETFs, please hit the like button and subscribe to the Crypto Skill for more videos just like this. Drop a comment below. Are you interested in buying a Bitcoin ETF? Let me know. See you in the next video.